All right, family. All right, welcome back to another edition of Melancholy News. Let's go ahead and get it started. Today is July 16, 2021. All right, we see the market futures look all across the board. S&P, Dow, NASDAQ is up. S&P, Russell 2000 is down. All right, so we're looking at a little bit of mixed reviews from the futures markets. All right, so let's go ahead and keep going. All right, you see the Nikkei 225 and the FTSE. They're both the FTSE is up just a little bit, and the Nikkei 225 is down. All right, take a look at Bitcoin and some cryptos. Bitcoin is kind of got a little bit of bounce back. All right, at 40,000 plus, and Simply Crypto is crept over 1,000 for just a little bit of a change. All right. All right, so look at the 10-year bond at 1.490. All right, the VIX is up. All right, look at them, get into a little bit of foreign currencies. You see the GBP to the US dollar, and then you have the US dollar to Japanese yen is a little bit down as well. All right, so let's take a look at that. Was look at some of the markets, financial markets from YahooFinance.com. All right, let's switch on over to Kitco.com. You see the New York spot price, but let's switch down here to the world spot price here. You see gold is up. All right, get the little camera view in there a little bit better. All right, see gold is up a little bit, silver's up into about 11 cents. Platinum is down, palladium is down, rhodium is taking a little bit of a beating off a high of almost 30,000 for the asking price an ounce. All right, but as we see here, let's go down. Look at the ratios of gold to the other precious metals. You see silver is actually moving up a little bit in ratio towards gold. So for every 1 ounce of gold, it takes about 66 point, just to round it up to about 67 ounces per silver to buy 1 ounce of gold. All right, that is went down from like 68 and a little bit for an ounce of for gold. All right. So that was from YahooFinance.com. All right, let's get into some actual news here. Ooh, and this is a big one, fam. Let me get the camera view out of here a little bit better. All right, I'm working on a new stand relief for the camera, so that way instead I won't be having to hold the camera for you. All right. This is from FreightWaves.com. No relief. Global container shortage likely to last until 2022. All right. So get out to the article a little bit. All right. The world does not have enough containers in the right places to handle the right cargo demand. The conundrum is that has persisted for so long that the mainstream media is finally covering it. All right. So I can be up here a little bit though. The New York Times reported last Friday how the box shortfall is contributing to inflation demand as outstripped the availability of containers, with the U.S. pandemic situation has eased to the point where retailers have passed long higher transport costs to consumers without being accused of price gouging, and the cost of just about everything else is rising. All right, so we get into this a little bit here. They've managed to there's a global shortage and they can't get things into place where they need to be. All right, this is what happens when you have the just-in-time delivery system. All right, so they can't get things to market. They're having vendors having to pay higher costs, and with the retailers having to pay the higher costs from the vendors and the freighters to get it to market. And so they've managed to just upgrade the prices here and there, cute little fancy words to get it to say, okay, it's not really nothing, and really, what happens is we wind up paying a higher cost for everything else, and they using cute words and everything else to justify raising the prices without people really noticing that the prices have increased. But if you look at the inflation over time, look at the purchase power of the U.S. of your money, guess what? You can tell. I like to go by the Whopper principle. Look at the price of a Whopper based in 1999 prices versus Whopper prices now in 2021. All right. So go ahead and get this article. That's from FreightWaves.com. All right, FreightWaves.com. All right, and to continue this more even better. All right, look at here. See, China ship skips Singapore as China congestion snarls chain supply. So they having big issues in China right now. The If you ain't heard about it in the news, you probably haven't heard about the news in the mainstream media here in the States. But they having another virus outbreak, and it has to do with somewhat of some poultry, chickens. All right. So with the congestion being backed up in China, with them locking down more provinces and major industrial cities they got there, all right, especially ones on the port, you having a big supply issue. All right. Supply line. Let's get into this article a little bit. Supply lines in a daily writer that tracks trade and supply chains disrupted by the pandemic. All right, delays from congestion of southern Chinese ports triggered by a fresh COVID-19 outbreak are ripping through global supply chains, threatening to inflate the cost and exaggerate distributions. All right. So, a cargo vessel operated by Costco Shipping Lines Company will skip a scheduled port in Singapore this month because delays in China, according to Alliance partner Ocean Network Express Holdings Limited. All right, one of the CMA's and CGE's vessels heading to China in July will also not call will not call at the Southeastern Asian transshipment hub. All right, I'm reading. Okay, all right. So sorry about that. All right. The delays have already resulted in pressuring soaring shipping prices with China due to lack of containers and increasing export demand, said John Brazil, our Vice President of Marketing at Project 44, a supply chain intelligence firm. All right, these high shipping costs are just one of the factors that may contribute to additional looming threat to global inflation. All right, and then you got some little charts right here. All right, that's for the malt liquor virus cases. All right, or the virus that can tell time. All right. A virus outbreak at Yingtan and Shenzhen has already inflated spot freight rates globally, with Drewry's World Container Index increasing 10% in the past 3 weeks, said Simon Henney, Senior Manager of Container Research at Drewry's Shipping Consultants Limited. All right. So we got major issues going on with shipping containers. They're bypassing a major port of Singapore. Singapore is a very big major port. All right, I spent some time in Singapore before, and it is a very busy port. And if they're bypassing China or Singapore, uh, just to try to get to China faster, then that is a major big issue. All right, so they can actually get their stuff and try to get in and get out and get to the global markets around the world. All right. So Chinese having major lockdown issues again, and they a new chicken virus they reported around there too. You got major freight issues, and you're gonna start seeing global supply shortages left and right, and you soaring prices. All right. So your purchasing power is going to be going downhill, right? So go and get the story from Bloomberg.com. That's from Bloomberg.com, right? And for our final story here, this is a very interesting. This is from Infowars.com. All right, that's Alex Jones's website. But every once in a while, they have some good juicy stories around here. Right, this is from corporate Infowars.com. Corporate recruiter warns energy companies to replace vaccinated employees within 3 years. All right, we'll read that article again. This is serious. Corporate recruiter warns energy companies to replace vaccinated employees within 3 years. All right. And as you see the article here, executives having their staff go through and look at the staffs that have received the vaccines, and they're planning to have replaced them all within the next 3 years. What does it say to you? She asked. All right. So get into here. All right. Get down here a little bit. All right. Carlo Bird, a recruiter from Rick Boy's Employment Network, explained that nearly half of these major companies' workforce will be replaced with fresh new workers within a few years due to the fact that they've been vaccinated. All right. The reason that is important is because what I'm seeing is an executive. What I'm seeing as an executive is that the industry happening right now as a result of the malt liquor virus vaccine. All right, and it's something called succession planning. Bird explained. All right. So I need you to go and get this article here, but please read it carefully. Please read into what the words are saying. All right, about what's going on and why these major corporations are about to get rid of all of their employees who have taken the liquor virus vaccine or the virus that can tell time vaccine within 3 years. All right, something's going on, but go and get that article yourself. Read into it, and let's get the research on. All right. Once again, that was from Infowars.com. Corporate recruiter warns energy companies to replace vaccinated employees within 3 years. All right. So once again, I want to thank you for joining us in another edition of Montgomery News. We want to say be safe, be sound, and remember, you're your own best banker. You're your own best credit union. You're your own best savings and loans. You're your own best financier. Once again, I want to thank you for joining us in another edition of Montgomery News. Go ahead and get that community system together. Go ahead and reach out to your neighbors, reach out to your community, reach out to other communities, get it started. Everything starts local. Once again, thank you for joining us on another edition of Melon News. Let's get it started.